All right. Hello, folks. Good evening. Yeah, once again, welcome back to my channel. So, today I'm here to give you a brief um, introduction to how you can go about your money management on your trading account. Okay. So, most of my folks, my page, and then some of you in my inner group have some challenge. And the challenge is that most of you are either over trading your account or you are not managing your funds well. Okay, you are not managing your funds well. Now, for you to really set or allocate an amount to trade on the market, one thing that you should know is that you shouldn't trade with capital that when you risk it, it's going to affect you drastically. All right. For instance, you can't trade with funds that are set aside for purposes that um, are really, really important. That when you lose it, it's going to affect your life. For example, you've set a money aside to pay your school fees, money that has been set aside to pay your rent. I don't encourage that you use such funds to trade on the market. All right. So funds that I would encourage that you use in trading on the market are funds that um, after your expenditures, you can keep that money for any other purpose. Should you lose it on the market, you don't stand to risk anything. All right. So now, some of you have worked hard earned monies. At the end of the month, you push a little bit of your salary into the market in hope that you're going to get some good returns and all that. That's fair. But today I'm going to really guide you through a little bit of what my mentor has structured already, that it can be more easy for you to build wealth. Okay. Now let's look at it. For most of you, I tell you that trading has returns, okay, and has rewards. But funny enough, for most of us, we are too eager to make all the returns there is in a few months, or in a space of 1 month. We want to metamorphose $10 into $1,000 in a space of 1 month. More especially if you are new to the market. Okay, I did encourage that. Now, let's be more realistic. When we have what we call risk-free monies, okay, for instance, if you take your money to the bank or your local bank in your country to go and invest, they have what they call risk-free, okay. So because the bank is going to assure you or guarantee you that at the end of a particular period that you agreed that your investment should end, you are going to get returns, and you know the specific amount of returns you are going to get. That is what we call risk free. Why is it risk free? It's risk free because the local bank or whichever central bank you've gone to put your money or deposited your money with them for them to metamorphose the money into a higher amount in some future date. What it means is that they are going to trade with the money. They are going to work with the money. And in as much as they work with the money, they are going to get returns on it. They are either making returns or they are making losses. Okay? And it does you don't care whether they make losses or returns, but to them, the most important thing is that you are making returns. To you, sorry, the most important thing at the end of the period is that you are going to get your money in addition to some returns. Okay. So assuming you invest your money in a bank, and on the normal, for instance, the current, let me look at it for you. Current T-bill rate in my country. Current T-bill rate in Ghana. Okay. So I'm going to show you something brief here. All right. So we are looking at the current interest rate on treasury bills. Okay. So if you buy treasury bills in my country, what's the current rate? So for instance, the interest rate per annum. Okay. So what is the interest rate of treasury bills in Ghana? Issue date 8 September 2023. These are the tender or whatever number. And then look at the interest rate they offered. 32.1701. And the 32.1701 is basically 32.1701 multiplied by or divided by. So let's put something here. Let me show you 32.17 whatever divided by 12. So on the monthly, okay, on the monthly, you are making just 2% of your money. So watch this. This is the value on the monthly. You are making 2%. The bank is giving you 2% of whatever income you've deposited with them. Okay. So this is a more realistic figure to have from a bank that is offering you risk-free money, a free money that at the end of the month, you know that this money is adding on to the money you have in the bank. Okay, so 2.6808 is the returns that the bank is offering you at the end of every month. And most people prefer to do that. Now, let's come back to our chart. With being more realistic on the market, okay, if you are going to be very real with yourself and not risk too much on the market, on the average, on the high side, you can set a monthly goal of 15%. Yeah, you can set a monthly goal of 15%. Now let's look at our calculation again. So for instance, if we are setting a monthly goal of 15%, if we are setting a monthly goal of 15% for your trading, now multiply 15 by 12. So you are making 180%. So for instance, if you had deposited an amount of, let's say, $2,000 and you are making returns of 180%, so this by 180.180. Okay, now what do we get? We are making sorry, is it the right thing? Yeah, 0.18. No, sorry, 18 point, sorry, 0.1.1.8 times 1.80. Okay, all right. So this is it. You are making an extra $3,600. Okay, so in addition to this, the 3,600, that's giving you $5,600 in a space of, let's say, in a space of 1 year. Okay, now if we are going by the same thing, okay, 2.6, which is they said it is 32% per annum. So in a way, you are multiplying $2,000 by 32.32. Okay. Now what do you get? 640. So imagine the bank is offering you $640 in addition to your $2,000. After 1 year, you are going to take $2,640. Whereas if you are going to minimize your risk and then be trading yourself, you are making $5,600. I'm making a whooping sum of $3,600 in a space of 1 year. Okay, so now whenever you're on the market, I would encourage that the market is a form of investment. So think like an investor when you're on the market. Let your mind work like an investor when you're on the market. Okay, don't risk too much. The bank doesn't risk too much of your money when they are trading. That's why they are able to promise you that they can even give you 2 point something percent at the end of every month, accumulated for a year to add up to 32%. Okay, now on the monthly goal, we have set our percentage. So monthly returns, we are expecting 30% of the monthly of our months returns on the month. Okay, all right, 30, just 30%, just 30%. Now, our initial capital that we want to invest here is $100. Okay, 100 US dollars. And then risk per trade. So for instance, if we take a trade, what are we willing to risk? So all our trades are set in such a way that, or we set the trade in such a way that we know that whatever amount we are risking is just 5% of our trade. So for instance, if I take a trade, I have to set my stop loss to a point where it gives me just 5% loss. So for instance, if I have $100 account, I shouldn't open a trade and set a stop loss of like $15. No, that's almost like 15% of it is risk. But here, I have to always make sure that if I'm setting a trade, I'm setting a trade and risking just 5%, which is just $5. Okay. All right. Beautiful. Now let's look at it. So on the average monthly, if we have $100 and we are expecting a 30% return, it means that at the end of 1 month, in a space of 1 month, you are just making a profit of 30 US dollars. Just $30. That is no money, yeah. That is no money, but it's better than whatever the bank would want to offer you. So now we are saying that on the high side, we are choosing 30%, which is on the high side for most people. Yes, but for most pro traders, it's something bread and butter, 1 week or a daily affair. All right. But for beginners and for intermediates, I don't encourage that you go beyond this. Set achievable target for yourself. All right. Set target that you think that in your scope you can achieve. Now, if you set a trade within the whole month, how are you going to break it down to achieve this? So you are achieving $30 in a month. Now we have, let's say, 20 trading days in. If you are trading forex pairs, you have 20 trading days in a month. But if you are trading the synthetic indices, like what I do, you have almost the whole 31 and 30 days for yourself within the year. Okay. So for instance, we have like 20 trading days for ourselves, assuming we are trading forex pairs. So if we are supposed to take 20 days, it means that we are going to divide this by, let's say, first and foremost, let's look at it on the weekly. So we are looking at achieving 30% within a month. So on the weekly, we are dividing this by 4, which is giving us almost like, so for instance, here, if we do 30 by 4, sorry, 30 by 4, what we get here, 7.5, and it is clearly stated here weekly. Look at the weekly target, it's $7.5. So within a week, ensure that you are not just entering any trades. Within a week, I'm sure if you are going to be more selective about the entries, the trades that you take, you are going to get a very perfect trade that will just produce this small amount in a space of a short time. Oh yeah, set that target. Don't just see every single trade and jump into. There are some trade that gives you a more clear and more concise entry that this is it. Take this trade. It is like a sniper. You target some particular trade and then you just snipe it. And then you just make your money and then you are out. If you achieve your target for the week, just relax until you see something very simple bread and butter setup, you go in and engage the market. But beyond that, just sit back and watch quietly. And then when we are looking at the weekly, we are looking at it for 7.5. Now, how about daily? So it means that within a week, we have 5 days. So we divide 7.5 by 5 days on the forex market, and then let's say 7 days on the 6 days on the 7 days on the synthetic pairs, and it will give you your daily what you are supposed to achieve. Imagine getting $1, just $1 a day. It is an easy thing to get. It is so easy to get. Most of you have not been able to grow an account from $100 to let's say $200 before. You've never done that. You've never done that. Now watch this. This is the 4th month, and on the 4th month, what is the trading target on a daily basis on the 4th month? And that is $2.2. So within a day, you are just aiming to get $2 per day. $2 per day. Now, when you look at this table, accumulatively, after trading consistently for 1 year, from January to December. If the money is not, that's why I said on the if you are trading, monies that are supposed to be traded are not monies that are meant for some specific project that you have to withdraw in and out and all that. You get it? Beautiful. At the end of one trading month, look at the amount of money you get. One trading year from January to December, you are making an amount of $2,330. Imagine someone dashes you $2,000. That's quite some amount of money. Most of you, if I would even ask, in your company that you work in, accumulatively, when you accumulate your salary at the end of, does your boss dash you this amount of money? Oh no. So come on, this is a good way to take your time and trade carefully to achieve something for yourself. Now, it doesn't just end there. Now let's accumulate this till the second year. In a space of 2 years, watch this, $54,280. That is a good money. $54,000. Now let's accumulate it to 1 year, at the third year. Can you imagine in a space of 3 years you are becoming a millionaire? Come on, in a space of 3 years you are $1 million account holder. Have you thought of that? Have you ever aimed to get to become a millionaire, to hold 1 million US dollars in a space of in the next 3 years? Do you have that aim? Do you have that plan? Do you have that goal? And it is achievable, it's attainable. The only thing is just give yourself the time and that luxury, trade your account with plan, with good money management. Don't just see any trade and just jump in. Trade that offers you low risk. These are the trade that you are looking for. Within a week, you can have just one trade within a week, and that trade alone can fetch you more than enough. That trade can give you all that you need to even achieve within a whole week or within a whole month. This is all that I wanted to let you understand, that when it comes to the Forex market, you can risk a lot, lose a lot of money. But if you're also going to be more practical, more concise, and use proper money management, like what I have drawn here, like what my mentor has provided here, it will give you that room, it will give you that edge to become a very, 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 very fruitful trader after a space of time. Imagine within the next 3 years, most people will not find themselves trading because they've lost so much and they've given up on trading. But if you are going to take your time, build your account on precept upon precept, adapt one strategy that really works. Go to my videos. I've posted a lot of videos about bread and butter, a lot of strategies that you can use to analyze the market, and always seek for those particular signs on the market. If you get them, execute a trade. If you get them, just execute a trade. It's as simple as that. So guys, that is all that I have for you when it comes to money management. Now, let's go to our charts and see a quick update on a trade I asked, a trade that I made you enter a few days. That was 2 days ago. I posted a video on that, volatility 50. Okay, volatility 50, yeah. Now, beautifully, I took a trade. I took the trade, and you can see it on my chart. I don't hide anything. I took the trade from here and I exited somewhere here. Although price still pushed further down, you know. All right. Now, as I explained a few days ago that we had, you could see that I set another trade in there. No worries. I'll give you why I've set that trade, and then hopefully you'd understand why. Now, I told you that price had shifted structure to the downside by breaking this low, and then price retraced into an ultimate trade entry. And I had the chance to enter in here with a small stop, and price rallied down all the way. After I closed in on the fair value gap, I was okay, so I had to exit. Yes, I closed in on the fair value gap, and then I exited at that point. As simple as that. You don't have to wait till price comes down and sweep the low and all that. No, you have a fair value gap in here. Price closes in on the fair value gap. It's okay. Now watch this. From this high to this low. Okay, where is the equilibrium? Equilibrium is this point, right on top of this particular candle in here. Should price reverse into this area and comes down below the equilibrium, this is a premium prices. So anything below here is discount price. So you know that when price is in discount, it will also force to come back to seek for premium prices. So at this point, we just have to collapse all my trade, and I'm okay. This is the swing this is the recent swing from this high to this low. So anything within this swing, we are looking for the premium side of it and then the discount side of it. So the premium side, as it was finishing, I just took off my trade and I was okay for the day. All right. So I gave you this clue. If you watch the videos I posted, I told you we're somewhere here and I showed you you can take your trade in here, or I've set my whatever. During the day, in the morning, the price went back into that area before it ultimately broke down. And a few people who watched the video earlier took the trade. And it's as simple as that. It's as simple as the market structure shifting. And then we see we still want to seek for lower prices. But take profit. Always make sure that you take profit along the line. Should price reverse into whatever area, you still engage the market again. It's as simple as that. It's as simple as that. That is it for volatility 50. I'm expecting lower prices. However, price can still come in and close in on the fair value gap. So we have this fair value gap, another fair value gap, and this is the third one. And I'm seeing some form of price action going to happen in here. I don't know, but I'm waiting for price. If price should reverse back into this area, then we'll see how we're going to engage the market. Nevertheless, we are still waiting patiently. So let's look at volatility 100. Okay, so volatility 100, I think I told you about the breaking structure to the upside, and then price came down, broke the structure to the upside again, still confirming that we are still in a bullish market. And then price came back, ultimately traded into some 1 hour order block resting in here, and then we took this trade. So most of you have seen the trades that I've taken on my chart, and all that. Yes, there are days that I take losing trades and all that. For instance, this trade in here, I took 2 different trades in here, this one and this one. And then I had to ultimately, I just couldn't hold it because I had opened 2 different accounts. I had opened 2 different trades. It was just too much for me. So I had to just close and then wait for the signs to happen before I ultimately took a proper trade. All right. So basically, that is all there is. I took 3 different losses right before all the way until I had to recover from some areas in here and all that, from this point to this point, this point to this point. I took a lot of some other profit to recover from my losses that I had taken initially, and most of them were on the smaller time frame. And I believe that everything goes into my journal. That is the main and the most important thing. All right. So now we see price cycling or surging forward upwards. Now, what's my aim? I'm expecting price to take down all this um, low resistance liquidity resting in here. So I'm expecting price to, it's a long whatever, but I'm expecting price to do that. Okay. Now let's look at volatility 75. 75, as I told you, when price traded into this area, broke the structure, we had to come down all the way, closed in on all this fair value gap, and then we see some form of reversal into this area beautifully. So until price comes back into this area, I'm not engaging the market. I'm just waiting patiently. All right. I'm just waiting patiently. Then what else? Volatility 25. As I told you that should price break below this low, then we know that we are in a bearish market. Okay, so we know that the trend shifted. You were just sweeping from the low to the high, the low to the high, then until price breaks further. So I knew that in as much as you've broken this way. So now this is a high, this is a low. This is a high, this is it. Probably this could be it low if it doesn't continue, say 10 up or down, just maybe if it reverses into it. I regard this one as the low. All right. So I'll have to hunt for buys either in here where we have this fair value gap on a smaller time frame, hunt well and know where exactly I can execute my trades and all that. All right. But if it doesn't do that and it continues, it means that the low is not yet settled for. Okay. All right. So that is it for volatility 25, 75, 100, and then 50. All right. Another time I'm going to give you update on volatility 10. All right. So until tomorrow, I wish you all the best in your trading. Enjoy the rest of the evening. See you in my next video. If you are new to my channel, please do well and subscribe. Give me a thumbs up if you like the video, and then I'll see you in the next video. See you.